beaucoup Rama pour cet bel exemple de coopération entre.
Thank you very much for this amazing example of cooperation between Africa and the United States. It's an exceptional transition for me.
Vice President of the National Association of Security Dealers Automated Quotations, which you will likely better know by its acronym Nasdaq, the US-based stock market exchange and the second largest stock exchange by market cap globally. I'd like to invite him to the stage. Please give him a warm round of applause. Thank you. So the leitmotif of this meeting really is about scale. Can Africa scale its corporates? Can Africa scale its banks? Especially as Western banking franchises edge towards the exit. Can it attract the international funding it will need for its most ambitious projects? There are under a dozen African banks licensed in Europe and the United States combined. And in fact, in the US, there is just a single African banking license, Nigeria's UBA, and you can read about that in the latest edition of the Africa Report, which you should find sitting around the conference center, a magazine and website, part of the Jeune Afrique media group, as you know well. So, Edward, can Africa build these big corporates and financial institutions? And if I were to tell you that, you know, I've just come into a little bit of money, and I want to set up a stock exchange in Ghana, let's say, although they have their own, but I want to set up a stock exchange. What do you think the sort of top 3 steps would be for me?
Well, the answer to your first question is it can be done. In fact, at Nasdaq, we're very optimistic on Africa. We're very bullish, if you will. We have an increasing presence here, trying to work with your stock exchanges, partner with them, other financial institutions, central banks, and banks. But to take a step back and tell you a little bit about myself and Nasdaq, I've been at Nasdaq for 25 years. I came there from the U.S. Treasury Department. At Treasury, I went to the New York Stock Exchange, and I went to their floor, and I asked one of their floor brokers, well, can't you do all this digitally or electronically? He said, no, if you're going to buy and sell securities, you have to look someone in the eye. And that didn't sound right to me. So I went to Nasdaq, and we were the only electronic stock exchange at the time in 1999. And people forget, but at that time, once you joined Nasdaq, if you became a big company, you went to the New York Stock Exchange. Now we're the home of the 5 largest companies in the world. We operate 27 markets, including the markets in Northern Europe and Finland, Denmark, and Stockholm, as well as 13 markets in the United States. But we've had a North Star throughout this, and it's been about a couple of things, or a couple of North Stars, if you will. It's been about integrity, one. So every day, there are 80 billion messages, 30 to 80 billion messages exchanged on NASDAQ about our market. Why? It's because people trust us, and they trust the system, the technology, and the regulation. But we've always adhered to the principle that integrity comes first. And I was general counsel for the company for 20 years. Whenever I went to the board, I needed something, they always said yes, in terms of technology or regulatory systems or personnel. So integrity was huge. And 2 is technological innovation. And at that time in the 1990s, the world was being challenged in many ways. There was an information revolution. There was globalization occurring, and then there was a technological revolution. And we dealt with those forces with a market based upon sound technology, not just to bring buyers and sellers together, but also to distribute information to them. We had securities of companies, and we do today, that have no revenue, and they have no products. What they do have often is they own a molecule or an algorithm or something that they think is going to change the world. And often it does. And investors, though, trust our systems, they trust the disclosure process. So your question of starting a new market, it's more than, we'd love to believe, and we'd love you to believe, that we have some magic dust that we can throw around and call it Nasdaq and everything. It's an ecosystem, to use an overused phrase. We believe a critical part of the U.S. financial markets, but also the accounting industry is, the regulatory infrastructure. Frankly, the great research universities in the United States, as Larry Summers, the former Treasury Secretary, said when asked, why does the United States have such a dynamic, innovative economy? He said, really, it's not the United States. It's about 10 states where the great research universities are located. Now, he was a little biased. He had been president of Harvard, but he believed in the education system, and we do. We see it every day on Nasdaq when companies go public. They are spinoffs, often from research at the great universities in the United States. The legal profession's important. The liquidity from pension funds is important. So you need all these elements. Of course, you need the financial players, the investment banks that are keyed to your investors and to your entrepreneurs. So it's a mix, and you need all those elements.
Well, I'm deeply disappointed to hear not only is it not going to be as easy as I imagined to set up a stock market, but also there is no such magic dust called Nasdaq. That's
we have some secrets. But
we're living in this this bumpy world right now, geopolitically. You know, we don't even have to go as far as Damascus to see the changes. There are no doubt more dominoes to fall, but also in the financial sector, we have shadow banking, we have crypto, as we heard in the earlier panel. Can you walk us through some of these systemic shifts and risks that we're seeing to the global financial systems?
You know, so that great capitalist Lenin said once that you can live through decades and nothing happens, and then in weeks, decades happen. And we're living through a period where in weeks, decades happen. We can hardly keep up with all the changes that are occurring, not just geopolitically, but in terms of the regulatory growth, if you will, and in terms of investors and how they're thinking of their investment lives, the role of the private markets, the role of passive investing, all these changes. But what I see when I go around the world is while all these changes are occurring, the world is coming closer together through the financial infrastructure, through technology, through, frankly, technology that we sell around the world. We not only own and operate markets, but we supply the technology behind over 100 other markets around the world, including many in Africa. For the biggest stock exchanges of the top 10 in Africa run on our technology. Plus, we supply technology to central banks in the treasury capital management that is so important in the capital systems of central banks in a very difficult, volatile economic environment. All of those systems meet international standards and help bring economies together. So while we're kind of spinning apart, there are ways to bring them together. And the investor, frankly, is demanding it, is demanding information systems. One of our biggest businesses is selling data around the world. Data, to use the tired phrase, but it is the lifeblood of financial markets. People when our data system, once in 25 years, it stopped. When it stopped, we had to stop our market. You can't, the trading system would have worked, but you can't ask people to trade without data, and current data, and reliable data, and data with integrity. So the world is coming closer together. We're trying to help with that. One huge area for us that's growing is serving banks in the anti-financial crime area. Financial crime is a huge problem globally. We serve 2,500 banks in the United States and increasingly banks around the world with technology that can find bad guys. We have modalities that are specifically focused on narcotic trading, illicit, human trafficking. We can find these people, and as the world becomes more digital, it becomes easier to find it. When we get away from Excel sheets and we use technology, when the bad guys know that you're watching them through a digital, electronic, economic infrastructure, they tend to not be bad because they know they're being watched. So technology is bringing the world together. It can bring your markets together, and it can help them participate in the global financial markets. Frankly, customers demand it, but it's not that hard to get it with the right technology.
Is crypto, for the good guys or for the bad guys?
There needs to be a regulatory system. Nasdaq has traded some instruments that the SEC has allowed us to trade. We believe with the new administration there'll be a regulatory system established for crypto, and we think that would be a good development. Again, I go back to how important integrity is, and frankly our brand is. And I think that it's not just with regard to crypto, but any innovative financial product, you have to find ways to protect the investor. When there was a carbon trading system first introduced in Europe, there wasn't a strict regulatory system around it, and people abused it. And unfortunately, that's human nature. And if you're in the markets business, if you're in the financial business, you cannot assume people are honest. I'm sorry. I wish I could say otherwise, but you have to protect your customers and investors and put in the right systems. But those systems exist, and frankly, it's easier to do with a digital market. Name me the last time you saw a headline about market manipulation on the U.S. equity markets. It doesn't happen, because no matter how fast you trade, I have a system that'll slow it down and find out where you are and find out if you're layering or doing something else. I can find it, and it makes the market safer.
Let's talk a little bit about Nasdaq's African customers. You mentioned earlier 4 out of the 10 big stock exchanges here on the continent run on your software. But sort of what are your customers after? What growth potential does Nasdaq see in these customers?
So in coming here, I forgot to bring my adapter for my charger, so I had to get one. And with our technology, you don't need an adapter for a large institutional investors in the United States to connect with us. So if you adopt our technology, it more easily facilitates you connecting with a global investor. Plus, in today's world, one of the huge factors is governments and people are no longer tolerant of, my server just went down, I need to shut down the market. Because you're shutting down the economy of a country often when you do. You have to be highly resilient and deliver 100% availability every day. And frankly, we have technology that has been tested all over the world in all different legal systems, and it works and it's very reliable. So that's what we have been able to implement here in partnership with stock exchanges in Africa. As I said, though, we have broadened in the last few years our product offerings, not just to stock exchanges, but to banks and central banks, and over 30 African countries. We provide technology in the risk management, treasury operations that, again, have advanced and need more than just Excel sheets. And you need real-time information. You need, as we were discussing backstage, the Silicon Valley Bank development in the United States. You can say a lot of things about it, but one of the things that was unique about it was it developed in a matter of hours. So our bank regulators and central banks, they didn't have the luxury of time. They needed real-time information about the capital situation with that bank and other regional banks. And they had to move very quickly. You couldn't wait for the weekend for the government to get its act together. You need real-time systems. It's often the markets are driven by social media, which is happening in real time. So these systems are increasingly in demand, and we are optimistic about partnering with financial participants here in Africa and helping them move to the global markets and meet those standards. And I know they can, and I think it will bring more opportunity to investors around the world and economic growth to Africa.
There have been attempts in the past to encourage cross-listings across different bourses, and it seems very hard. What are the real barriers, and how might we tackle them?
Well, I allude to the earlier discussion. So Nasdaq, as I mentioned, owns the stock exchanges in Sweden, Finland, Denmark, the Baltic states, and Iceland. We have a common regulatory system. It creates the ability, and those markets operate on a common regulatory platform. And so the Danish stock market in Copenhagen, even though it's quite small, is big enough to support the largest company in Europe, Novo Nordisk, which has a market cap of over $500 billion last time I looked. The Danish stock market isn't that big, but it can support that because it's part of these linkages that are so important. The problem with cross-listings is you often have a currency issue, you have different legal systems. It works when the underlying company has customers and an investment base in both countries to keep that liquidity. And increasingly we're seeing that in the US, where companies want to be listed in the United States also, for a lot of reasons, not the least of which is the geographic turmoil that has made many markets volatile and less attractive, and the US is more attractive. But it is certainly something that we see, but it's not easy to execute on.
So if I understand you correctly, having a common platform of regulation is a good idea if you want to encourage, much more vigorous.
In the Nordic area, there are a college, we call it a college of regulators. They meet regularly by law together, and they coordinate a rule book, which, even though those countries have a population of around 30 million people, they still support vibrant capital markets. Some of the most vibrant IPO markets in the world are in the Nordic countries, particularly in Sweden. And it's not just because of Nasdaq, it's a lot of reasons like we talked about earlier.
A common platform then makes sense. So why on earth did the UK choose to leave the European Union? Only joking. I'm not going to ask you that question. So there are linkages, mostly because I'm half French, half English, and the answer is too painful. The linkages between international finance cities and host cities and nations. I'm interested in understanding that ecosystem that you mentioned earlier. What creates a successful IFC? I know there are various cities, and Casablanca is one of them, but Lagos is another, which really want to promote this as a way of kickstarting their own financial sector, but also building these linkages beyond just the banks.
Well, the U.S. still struggles with it, but to me, it comes down to the issue of open capital markets. So the U.S. has succeeded with generally having open capital markets. Now, recent political developments have complicated that, but the long trend of history was we did not restrict investment into the country or out. And the reason was purely economics, that the free flow of capital would encourage economic growth in the United States. I still believe in that principle, but in many countries there are protections and barriers to the free flow of capital. In a free trade area, you should remove that friction. And frankly, instead of having your large investors open up an investment office in London to get around your capital controls, you would set up a center without those controls in your country and create other incentives. But there also has to be a good regulatory system there, and frankly, good technology too. But culture is something that you can't ignore either. Even with the technology, the rule system, the removal of friction, if you will, in the economic system, not every culture in the world is a risk-taking equity culture. The U.S., for a lot of reasons, a country of immigrants, people had to take great risks to come there. My great-grandfather was an orphan from Italy. He came over by himself when he was 12. It creates a certain mindset that is different. There are other strengths in other cultures that you should take advantage of, but you have to look at your culture and how you can, if you will, accelerate the positive aspects of it, remove friction, have a good legal system and good technology.
The capital controls point is a tricky one, I think, for emerging nations, because they will have seen what's happened in the last 20 years where the West and America especially has opened its markets. And in the 1950s and 60s and 70s, that worked really well. Japan emerged, South Korea emerged, then China emerged, and with some use of capital controls has been, I guess, I think eating the lunch is the wrong word, but certainly I hear now at the top levels across Europe, for example, that we feel we were a bit naive in assuming things would change. So if you are a country, an emerging power in Africa, how do you deal with this issue of capital controls?
Well, I think in a democracy, of course, you're going to have to listen to your people and their attitudes. You have to draw upon your history and the rest, but there's no substitution in developing an economy for foreign direct investment. And let's just take it as an example, a venture capital fund from the United States. What is the first question they ask themselves before they invest in another country? It is, how am I going to get my money out? Okay? They don't put it in until they know how they're going to get it out. They have a forecast, they have an analysis, they do their due diligence, but in the end, they're looking to get their money out. And if you want to attract the initial investment, you have to allow the capital to leave in some form, not all of it. Hopefully, by the time the capital has come in and the factory has been built or whatever, the externalities of the economic benefits are evident to the country, and you don't mind someone making a profit. But that you have to, if you need foreign direct investment, it has to have a way of getting out.
Fantastic. I'm told we have time for one more question. So I wanted to touch back on this theme of Africa's domestic banking franchises and how they can meet global regulatory requirements. There are boosters who think that Africa's financial champions are going to be connecting Africa to the world. And then from the other side, people are concerned that maybe the cost of compliance is something that they may have underestimated if they genuinely want to play that connecting role. How does it look from your perspective?
Well, again, those domestic financial institutions are the bloodstream through which you are going to attract the capital to grow the economy. There are ways to simplify the compliance costs and the regulatory costs. Technology is one way. Increasingly, we're finding, for instance, with the use of artificial intelligence, that you can reduce the human costs associated with compliance. But there is no substitution for the confidence that you get by being able to represent to the global investor that you are meeting these international standards. So, as they say in the law, it's the sine qua non. It is, or phrase I don't particularly like, table stakes. You have to do it. It can be done if you do it in combination with other factors like bringing transparency to your marketplace, bringing good technology, good regulation, encouraging entrepreneurship. Success will come.
Edward Knight, Executive Vice President of Nasdaq. Thank you very much. A warm round of applause.
Thank you. Thank you. Appreciate it.
I will now hand the stage over to our next panel. I'm being told I won't, that we are actually going to a break. Thank you very much. Again, a warm round of applause for Edward Knight from Nasdaq. Thank you.